The trend line is one of the most powerful tools in trading, but the problem is that most traders use it incorrectly. And the most confusing thing is that each trader draws it differently. For example, some traders draw it by connecting it to the wick of the candle, and some traders draw it by connecting it to the body of the candle. Even if they draw it correctly for a while, they still have a question. Should they enter when the price breaks the trend line or when the price touches it? Well, in this video, I'm going to explain step by step how to trade on a trend line. And I'll also share 2 simple strategies, so be sure to watch the video until the end. So, first, let's understand what a trend line is. A trend line is a simple line that shows the direction of the price, meaning the price is making higher highs and moving higher. This means the market is currently in an uptrend, and if the market continues to make lower lows and then moves down, it means there's a downtrend. We can understand this with the help of a trend line. For example, if the price is making higher highs and moving up, we'll draw a trend line connecting it to the entire swing low. We'll call this trend line an upper trend line. This trend line tells us that buyers are currently strong in the market. The price is repeatedly taking support here and moving up. The next time the price returns to this support, you can see a good trading opportunity. And similarly, if the price is making lower lows and moving down, we'll draw a trend line connecting it to the entire swing high. We'll call this a downtrend line. This trend line tells us that sellers are currently strong in the market because the price is repeatedly reaching this resistance level and moving down. So, for us, this is a strong trend line. And the next time the price returns to this level, you can spot a sell opportunity. But many of you have a question. Should you draw a trend line connecting week to week or a body to body? Question mark. I'll explain the answer to that later. So, why should you draw a trend line? Sometimes prices fluctuate in the short term. Therefore, by drawing a trend line, you can determine whether the market is currently bullish or bearish. If the market is bullish, you should only look for buy opportunities. And if the market is bearish, you should look for sell opportunities. You should never trade on trend lines again. Trend lines not only indicate direction, but also tell you where to enter and exit. How? See this. For example, whenever the price touches the upper trend line and comes back to retest, you can make your entry here. Similarly, if the price touches the downtrend line and comes back to retest, you can make your entry there. This means that the trend line shows the exact level where the price can react. But let me tell you one thing, it's not just a line, it's a zone. I know, but you might still be confused about how to properly draw a trend line and how to trade on it. So let's look at that. Let's explore the 2 ways to trade on a trend line one by one. So first, trade with this continuous pattern. Look here, the price is on an uptrend, so we'll draw a trend line by connecting all the swing lows. You can draw the trend line by connecting either the velocity or the body. The price should simply touch the continuous trend line, as we did in this case. The next time the price touches this level again, there's a chance of a reversal. As soon as the price touches the trend line and a strong candle forms, accompanied by significant volume, you can make your entry, with your stop loss placed at the candle's low. Consider another example. A downtrend is underway here, so we'll draw a trend line connecting all the swing highs. The next time the price returns to this level and forms a strong candle, we can establish our position there, with our stop loss placed at the candle's high. I hope you've understood how to trade a continuous pattern. Let's also look at another method, a trade with a trendline breakout. In this example, the price is making a lower low and moving down, so we'll draw a trend line connecting all the swing lows. Next time, the price reaches this trend line and breaks it, and the next candle also breaks this candle, you can make your entry there. However, I believe you should seek further confirmation. When the price returns to retest, you can make your entry. Your stop loss will be at the low of the breakout candle. But I'll explain where to place your target in my second strategy section so you'll have a clearer understanding. Consider another example. Here, the price is making a higher high and moving up, so you'll draw a trend line connecting all the swing highs. The next time the price breaks this trend line and the next candle also breaks it, you can make your entry. And your stop loss will be at the high of this candle. Let's explain the strategy I personally use. I use 2 indicators in this strategy. So, let's understand it better with the help of an example. Look here, the price is on an uptrend because it's making higher highs and moving up. So, we'll draw a trend line connecting all the swing lows. Here, the price touched the trend line 4 times. This means there's a strong uptrend here. Next, go to the indicator section. I'm currently using Go Charting. You can use TradingView. Both are the same. Now, I'll search for moving average. Exponential moving average appears here. I'll double click here because we need 2 moving averages. I'll go to the edit section for the first moving average. I'll set the period to 20, and you can choose any color. Next, I'll go to the settings for the second EMA. I'll set the period to 50 and click apply. Then, go back to the indicator section. Search for volume. Simple volume will appear there. Click on it. Now, you need to wait until the price reaches the trend line. As soon as the price reaches the trend line, bounces back below it, and then retests, you can take your entry here. But first, you need to get 3 confirmations. See how? For the first confirmation, whether the retest candle broke the high of this candle or not. And for the second confirmation, whether the 20 and 50 EMAs crossed here or not. And for the third confirmation, you need to check the volume here to see if it's high or not. Look here, the retest candle also broke and closed, and the 20 and 50 EMAs also crossed here, and volume is also high here. So, you can make your entry here, and your stop loss will be at the low of this retest candle and the target here until the retest crossover occurs. So, you can see for yourself how big the profit was. But let me tell you one thing. If you're worried about losing, you can use a risk-reward ratio of 1 to 3. This will be very safe for you. You won't be as afraid of losing. However, before applying this strategy to the live market, be sure to backtest it. If you enjoyed the video, please hype it and let me know in the comments what topic you'd like to see next. I'll definitely cover that topic.